Welcome to the Forex, and here we're looking at the US dollar. As pointed out yesterday, that we've got these old lows here, so it's going to offer support over here, and currently 90.7950, the midpoint is the support, and we can expect to bounce back up 50-60% of this move down through to here, and the resistance would be the 79.72 sort of area there. And this is mainly important if you're looking at the euro to the upside, because with the euro here we're looking, there's been the May Day, the Labour holiday in Europe, so it's been slow trading in the euro and the DAX as well, but look, the main point here is pretty much the same as yesterday. We were looking for this move up through here, so we were looking for a move back down through here. So, you know, while that 79.50 on the US dollar is the support, and looking at a bounce there, well, then we're going to be looking at this come back down through to here. How far it comes back is a little bit sort of unknown. You have to see what sort of volume comes back in when Europe comes back online, so to speak. But the main point is that seeing a dip, we're working with the closest largest number. So if the market moves down below the 138.50, the midpoint, which is important, and then develops support back on it, then that's the trigger to the upside. If it doesn't come all the way down to the 50-60% retracement level, does something up here, then you would look at the 138.72 as a tested support to go to the upside. So either way, you won't miss it, but you just want that little dip below, then look for the closest largest number as a tested support, and then move from that point. This market is still deeply, it's still oversold, so it may not pull back that much actually. The Australian market has turned a bit bearish. Just coming back into the bigger picture here for a moment, because we've got two counts here. This is the weekly chart here. We're either looking for 5 waves up through to here, and this is the top of the 3rd wave so far, and we're looking at this being the 4th wave. That's one of the counts that we've got. The other count is that the move up through here is in 3 waves, an A and a B and a C, and finishing at the 38.2 retracement level, which is about where it is now as wave 4 here. So that can be the top of this C wave here, or the top of wave 3. So we're just trying to work through that, and this is it here on more of a on daily chart anyway. So here we've got the ABC here, which would be the A, the B and the C here. Otherwise we've got wave 3 and wave 4 here, pulling back to the wave 4 of one lesser degree, the 92. In the bigger picture, if the 92 becomes, well, if the 2 in group 1 becomes the resistance, then it turns into bearish market at that point there. We were looking a little bit sort of hopeful last couple of sessions to see the push up through here, because the first push up here was in 5 waves, but the second push up is only in 3 waves. So it's likely to be corrective here, where we're looking and hoping for support on 93. We still may get it. It's all a bit sort of iffy really, but the same thing, we've either got wave 4 down to this point here, or we've got wave 1 down to here, and this is an A and a B and a C back for wave 2 here, and then we'll see further downside here. As I mentioned before, the 72, the 272 is really important here in terms of support and resistance, especially now that you know the market has spent time here, and you can really start to see that this is a real sort of balance line through here for this particular number through here. So yeah, but look, what we were looking for yesterday, or the last few days, we got 1, 2, 3, 4, 5. So we had a nice 5-wave structure here. So that means that after a correction, coming back into the 92.50 where we're looking to buy, we'll look for another 5 waves up, and that's fine. But this sharp move off this point here, from China data, so forth, has knocked it around a little bit. So we just got to kind of allow it to settle a little bit, but it could certainly get quite bearish from here, and we just need to be very careful. So the move down through here, we could get an A wave coming back up here, a B, a C, and then move straight down from here. So you need to allow this to develop somewhat. If we just move in here a little bit further through here, still ever hopeful that we can push up from here in terms of up for 1, back for 2, and up for 3 here, and so on. But This, as I just mentioned, this can also be the ABC here, an A and a B and a C wave here, and then roll over from here. So if you see something like that over here, then you know where you are and you know what to do at that point there. In terms of adding longs here, then we need to wait for 93 to become the support up here. You can bring stops up, well, I had them at 92.46, but you could bring them right up to here if you wanted to, because of breach of this here, you can just reverse the position to go short from that point there. Alrighty, the Euro Australian, there's no real change in this here. Same old sort of story. Support on 150 gives us a bullish picture, 149 gives us a bearish picture, but we should be able to look to take the break of this here at 149.39 here. So if that gets broken, you could add the first short position from there, and then once 149.20, the next one down, the pivot within group 1 becomes the resistance, you can look to add to there as well. From this high here, you can see 1, 2, 3, 4, and 5 here. So we're moving from an A and a B and a C here, and then down again, a little bit like the Australian dollar. The pound yen is also has little 5 waves down from its high here. It's got this little A, B, C here, so it's likely to move down further as well. Yes, it can be an A wave and a B wave and a C wave to here. And look, while it's in group 2 here, 65.72 on the 80, then it's a sign of strength and it's a sign of support, and you need to stay on the long side from that point there. But a breaking of, say, this low here, then you know that, well, dropping out of group 2 here, you know that you're going to be looking at a larger correction at that point. But as it stands, it's holding its ground quite nicely. The Euro Yen, same story here as well. We're looking at this as a B wave up here, but and then a C wave down through to here in 5 waves, and that would be down for 1, back for 2, and then down for 3, 4, and 5 down through to here. I would be proved wrong if the 142 became a nice tested support area, and if that's the case, a tested support, not just poking up through here, breaking out. Don't trade the breakout, always trade the retest. Look, yeah, it's not support, so we can't go long. The bearish bias is still in at this stage. So, yeah, well, look here, I guess the 141.50, the midpoint here, if that became the retested resistance, you could short from that point. You could probably also short from the 141.72 as a really nice, solid retested resistance, and use the 141.65 breakout on the low side to out of group 2 to add to the position or glean the first position. Right, well, that's it. All good. Okay, cheers.